core consumer inflation has stayed above the 2% BOJ target for over a year now. I mean, obviously, this is a bit more granular. This is the Tokyo area, but Tokyo is a big place with a lot of people. What's your read on this and the direction of inflation from here?
It is quite a bit lower than I expected. I thought it stayed about the same, 3.4%, because what we are seeing is not so much an inflation drive right now. It is more a kind of sector rotation. Government has, capping energy prices, so that is not going so much into inflation anymore, but service prices are going up. And this is very important because inflation is spreading now. That actually the number is at 3.2%, so lower, and it's a good indicator for the rest of the country, will probably convince the Bank of Japan to do even less than they might have been thinking about.
Well, let's bring that up, actually, because Ueda, the new Bank of Japan governor, says that changing the target to the 5-year bond yield from the current 10-year zone would be among the options if it were to modify its yield curve control policy in the future. To put that in layman's terms for us as to what that would achieve and whether or not it's necessary and whether that is the best option on the table.
Well, first, Mr. Ueda is going each time out of his way to make very clear that he is not in the market of raising interest rates in Japan now or probably, quite a few months ahead. Inflation is one thing that is gradually coming down again. And the other point is they have to change the entire monetary policy package. Japan is not in a situation where you just raise a little bit the rates or lower them. They have yield curve control, where you control the yield curve from the short end, which is still negative, to the 10-year bond, which is around 0.5%. So his comment is when we are moving to the 5-year target, half of it, then there will be more flexibility at the long end. That would be a kind of tightening because market demand is there. And that is his comment. His comment is we will not do too much. If we do a little bit, we move the time frame, not the rate.
So does that mean then, Martin, that we have to rip up the script as it applies to the end-year dollar-yen rate of 120, 125?
Well, I wouldn't have subscribed to that in any case, so I'm a bit biased. But yes, what we are clearly seeing is that the yen is a lot weaker. And this is because, people were expecting when everybody is going up, and the Bank of Japan made a big bet last year not to increase interest rates, at least not significantly. Everybody was expecting the new governor. He will have to do something. And from the start, Mr. Ueda makes very clear he is stubborn on that, and I think he will stick on that, and this explains why the yen is so very weak right now.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.